Hello, good morning everyone, Chris here. Happy Wednesday morning. Hope you're all doing good. And today is a video not about credit cards, not about American Express, not about anything at that realm. So we're talking about how to invest smartly in the UK. Ooh, I know, new topic. Let's get started. So, rule number one, start as early as you can. Now, that means if you're 18, you've got your first job, great, you can start investing. If you're 25, you've got some cash lying around, for whatever reason, you're a student, you don't have a lot of money, but you can still put, let's say, £250 aside, great, guess what? Start investing. It's very important that you start investing at a young age. Why? It's compound interest. Now, rule number two, know your risk strategy. Very important. Why? If you invest, and I should make this absolutely honestly clear, guys. I'm not a financial advisor. I'm not a professional. This is my experience and what I would do. Please do your own due diligence when you start investing. Okay, now with that being said, let's go back. So let's assume, as with most of you who are probably watching this, you already have a job, you've got some cash stacked aside. Let's say you've got £1,000. What can you do with it? Well, first of all, I think there are only two investment strategies I would go after first. The first one would be a low charge Vanguard ETF. Number one, I would split it. A Vanguard low cost ETF, and I would also invest in shares. Now, a Vanguard ETF, what I quite like, it's the S&P 500. It's traded in, of VN Ireland branch is a UCITFS. I think it's got a very, very low charge, and it's a good way to put some money in. Now, how much money? I'll explain in a minute what I would do. So the next thing I would do is invest in shares. Now, with me, guys, I invest in shares because I want growth and I want income. With shares, you've got two parts, but I'm probably going into those different approaches in another video because I don't want to clog it up too much. So, invest in shares. Now, what shares? Let's say you've got £1,000, you decide to put £500 in the Vanguard ETF. Let's say the S&P 500, you pay something ridiculously low, like 0.03%, which still beats any managed funds by a land mile, okay? And the other £500 you want to invest in shares. Now, how do you invest in shares? In my opinion, I found two brokers I'm happy with. That's Hargreaves Lansdowne and IG. Right now, I use mostly IG. I like the app. The app is great. And for me, the fees are okay. You've got trading fees of £8. And if you invest in shares, it's a minimum of £90. They say, well, if you sell and we charge you £8, you want to take a bit of profit out of it. Fair enough. I don't think you should ever, unless there is a real emergency or the share or the company is going bust, I don't think you should be selling shares. So you put £500 in shares. Now the question you might ask is, well, Chris, thank you very much, but what shares should I invest in? Now, again, my personal opinion, invest in shares of companies that you know, first of all, okay? Let's say a colleague of yours comes to work and says, man, I really heard about this share, it's great, it's amazing, the dividend yield is like 80%, and you can take out a lot of dividend, you get a lot of cash. It's this backdoor company nobody heard about yet, but it's the next big thing. No. Don't fall for this, please. I mean, obviously I was overdoing it now with 70-80% dividend yield, okay? But invest in companies that, so-called blue chips, okay? Like Volkswagen or Intel, Cisco, or in the UK, goddamn, use, sorry for swearing, use Domino's Pizza. Use, you can invest in IAG if you want to. So basically invest in companies that are reputable, that have been around for a long time. The dividend might not be as high, but they are steady, okay? This is important. Dividends can go up and can go down, and dividends can be stopped altogether. So invest in blue chip companies. Have a look. And if you want, download their annual reports. Have a look how they were doing. Or check it online, see what the dividend is. Check the dividend yield. Check the price earnings ratio, which we go into in another video. And then invest in a few companies first. Okay, and this is again my thinking. Yes, I think 10 to 15 companies in your portfolio would be great. But start out with lower, okay? Get into the game first. You need to do a bit of reading and you need to do a bit of research, okay? It's not, investing in shares is not something that you just do and then miraculously the money accumulates quickly. It's a lengthy process, so the sooner you start, the better. So let's say you've picked your company, you choose Volkswagen, IAG, and you throw in US companies, let's say Cisco, and you throw in Delta Airlines, because who doesn't love Delta? Okay, so now you've made your investment, and there you go. What do you do next? Rule number 3, guys. Rule number 3. Do not sell shares when the price go up. Again, I've spoken to people and people tell me, well, I'm on this company plan and I'm putting money in, and as soon as I get my shares, I'm gonna sell. Why? Why would you do such a thing? I mean, think about it. Why are you investing in shares in the first place? Am I investing in shares to take out 40 cents of profit? No. You want to invest in shares to achieve 2 things. You want dividend and you want growth. Or you just say, you know what, I'm not much of a growth investor, another video, I want my dividend. Fine. But please, people, do not invest in shares and then treat them like cash. Don't do that. Okay, you need to understand why you invest in shares in the first place. And I think shares are a very good, solid way of making money. They have been for hundreds of years, and trust me, I don't think it's going to change anytime soon. Okay. Another rule: do not invest in cryptocurrencies. And please hear me out on this one. I invested in cryptocurrencies. I was trading them. When I say trading, I was buying them low, selling them high via a tool called Coinergy, which is great. Don't get me wrong, but here's the problem. What many people do, cryptocurrencies are great, and I think they've got a great future. There's a good point behind it. And again, that's a whole different video for itself. They're not quite there yet. And people get too hyped up. Okay, so if you're not a stable investor and you see, Bitcoin, favorite example, Bitcoin is $20,000. Woohoo! Great, okay, I want to get in. They don't realize that the build up to £20,000 or dollars, was just hype. So don't buy into any sort of hype, whether it's cryptocurrency, shares, or whatever. forget about it. Don't do it. Don't invest crypto as a new investor. Invest in something that has proven over a long period of time. One major thing that I want to mention as well, please. You will come across YouTube ads and people who tell you that Forex trading is the best way to make a lot of money in a short period of time. I've been to a seminar of that. I found it amusing, but they nearly got me. So, Forex trading is complicated. It's complex. Yes, you can do it on IG, you can do it everywhere. And disclaimer here, I've done it myself. I've made a lot of money. I've lost a share amount of money. Would I recommend it for someone who's starting out? No. At the end of the day, guys, you invest your hard-earned cash, the cash that you saved. Invest it in something that helps you long term. If you don't know what you do in Forex, and you don't know what minor Forex is, major Forex, and you put 1,000 pounds in, I kid you not, you could lose 1,000 pounds in a day, or as a matter of minutes or hours. So don't do that. Be persistent and consistent in what you do. If you start investing in shares, you stick with it. You put an amount of money aside, and you invest constantly. You don't stop. It's not a one-off thing. You don't invest in shares once. Okay? You invest it on a monthly basis. Invest is key. Stick to your game plan. Okay, I've got an ETF, I've got shares. I'm investing in those regularly. You invest in it regularly and you don't stop. Very, very important. And another mindset, be ready that things don't go your way. Accept the fact that you at some point make a bad decision. You buy the share and it turns out to be crap. Then sell it. Don't hang on to something that keeps making losses. If you buy a share, you're adventurous, and the share doesn't turn out the way you expected it because it's a bit of an unknown stock, but you've done your due diligence, you think it's okay, then by all means sell it. You need to know when to stop at some point. So, right, okay, I'll keep it at this, and I'll speak to you in the next video. Hope you liked this one. Sorry if I sounded a bit aggressive here, but it's something close to my heart and something that I think many people get wrong. So let me know what you think about this. Like, subscribe, and I'll see you in the next video. Bye bye.